If you want to protect your savings or pension, pay attention to how your funds or banks interact with non-bank channels. Efforts to contain the risk from shadow banking are ongoing, but every solution comes with trade-offs and unintended consequences. The Financial Stability Board tracks $63.1 trillion in high-risk shadow banking activities across 29 major jurisdictions, representing 13.9% of global financial assets in 2022. The FSB monitors trends, issues policy frameworks, and highlights vulnerabilities. But its recommendations rely on national authorities for enforcement. This decentralized approach means gaps and inconsistencies remain, especially as financial activities shift across borders and regulatory regimes. Heavy restrictions aimed at curbing shadow banking could set off the very crisis they're meant to prevent, as institutions might rush to sell assets or withdraw funding to comply with new rules. This regulatory gap has allowed shadow banking to evolve largely unchecked, especially in areas like private credit. Non-bank lenders now handle riskier loans that traditional banks avoid, but they do so without deposit insurance or direct oversight. This uncertainty doesn't just concern policymakers or regulators. It affects anyone whose savings or investments are exposed to these markets. Shadow banking now accounts for nearly half of global financial assets, with non-bank financial intermediaries holding 49.2% as of end 2021. According to the Financial Stability Board, the ECB has warned that liquidity mismatches in non-banks can quickly spill over to the traditional banking sector, highlighting the risks that come with this growing interconnectedness. If you want to protect your savings or pension, pay attention to how your funds or banks interact with non-bank channels. Monitor for warning signs in your own portfolio, such as sudden fund outflows or unusual widening of credit spreads. Shadow banking expands when bank regulations tighten, so understanding these links is essential for safeguarding your financial future.